Hello students. There's one query, Mega, you have put across about the business connection will also include money gifted outside India by a resident to a foreign company NRI. Mega, that is not covered under section 911, it is covered under section 918. That is not covered under section 911, it is covered under section 918, Mega. Okay, so just keep that point in mind. Yes, Deepak, I think Deepak has already have given the observation. So this is not the case of a business connection, this is a different thing. So I think that is already known. So students, sorry for this particular bit of delay today. Could not connect you herein. Students, very quickly before other students also join, quickly this particular Unacademy herein, the offer which is going on, the present offer on from 26th to 30th of September. This particular offer, students, primarily is for the 20% discount offer. Students, is back for this limited period time of 26th September to 30th of September. And students, herein, as you can see, this particular offer is applicable for both the Plus as well as for the Iconic subscription. So this is one of the feature of the same. Second, an important point, students, over here is that you just need to use the code CADS for the purpose of getting that 20% discount on your subscription. Presently, it is for both Group 1, Group 2. Group 2 is what is in front of your screen right now, but definitely it is also applicable for across the CA final category. So students, here, as you all are aware, there is a 3-month subscription and it goes up to 36 months. So for different attempts, students, there is a different particular range which is available, and on that basis, students, the subscription can be taken. What is the benefit herein, students, in this context? All the features, students, wherein the top educators would be there on the platform. Evaluated test series, which is based on the ICI platform, which is also a part of it. These are the features, add-on features, apart from the other, which you all are already aware of it. Access to the live lectures and the recorded classes, and there is no time limit which has been set for this particular batch. So this is for the limited period, students, 26 to 30 September. Any of your friends who are there, say May 23, November 22 also, or November 23, May 24, November 24, all of them, students, will be eligible for this particular benefit. With that, students, I hope that we can just start off, students, in this case. Any other query based on the last lecture, students, which if it is there, please do let me know, or else I'm going to now start off with the discussion over here. Students, so business connect section 911 we have discussed last time, including the business connection and also the indirect transfer. Both the things have been discussed by us, students. Now, therefore, we will proceed further and then we go to the next particular section. Students, this is also very important for a November 22 examination. The salary income, when it is deemed to accrue or rise in India, although this may not be that important, but there are some incidental provision which is surrounding to this that makes this concept very important for your November 22 examination. We will go one by one, students. First of all, as you may be aware, when the salary income of a non-resident is deemed to accrue or rise in India, so the salary income of a non-resident is deemed to accrue or rise in India if the services are rendered in India. The salary income of a non-resident is deemed to accrue or rise in India if the services are rendered in India. That is a criteria. Apart from that, students, you may also be aware that if supposingly immediately before the service period in India, immediately before or immediately after, repeat, before the service period in India, if immediately before or immediately after the service period in India, if that non-resident employee has taken any leave, which is a paid leave, then even that particular salary which he has earned immediately before or immediately after his services which he has rendered in India, even that particular salary would be deemed to have accrued or rise in India. So this is the expansion of the scope of what is deemed to accrue or rise in India. Government part, students, you all are aware, if supposingly the government of India is the one who is paying the salary to its employee who are posted abroad, then the salary so paid by the government of India is always deemed to accrue rise in India. The salary paid by the government of India is always deemed to accrue rise in India. This exemption, students, is very important so far as your examinations are concerned. This is the exemption, students, is one of the most important area. Just be very careful about this. One is section 10.6.2, another is section 10.6.6. 10.6.2, students, I'll just let you know first up. What does 10.6.2 says? Remuneration which is received by the foreign diplomat or the consulate and their staff. Remuneration which is received by whom? By the foreign diplomat or the consulate and their staff. That remuneration by all the consulate and the staff member who are there in the who are posted, say for example in the embassies in India, then that particular remuneration, students, even that will be eligible for exemption. But the condition over here is, ICA has asked one question, students, in the examination, and the condition over here is this, that the individual to whom the remuneration has been given, should not be a citizen of India. He should not be a citizen of India. That is the only criteria that needs to be satisfied for the purpose of taking this exemption. So supposingly, students, if the individual happens to be a citizen of India, but he may be a non-resident, possibilities are there. The individual, he is a citizen of India, but he is a non-resident and he is posted in such foreign consulate, he is posted in such foreign embassies or the consulate, then in that particular case, whatever is the remuneration that has been paid to him, will those remuneration, will it be taxable? And the answer is yes, because the benefit of this exemption is available only to the individual who is not a citizen of India. Can he be a person of Indian origin? If he is not a citizen of India, but he is a person of Indian origin, then whether this exemption benefit, is it applicable? To that the answer is yes. If he is a person of Indian origin, but he is not a citizen of India, so to that person also the benefit of this exemption notification would be available, students. Just keep that particular point in mind as well. And now comes this very important exemption of section 10.6.6. Students, this is known as short stay exemption. What it is known as? It is known as short stay exemption. Short stay exemption. So you can just wonder on this particular part that many of the non-resident employees may come in India and they are providing services to the Indian companies, but they are the employees of that foreign company. So they are posted in India for time being to serve their Indian clients. So such particular non-resident employee who comes in India and provide their services for limited period, so you can say that their services are deemed to accrue rise in India. And because that their services are deemed to accrue rise in India, therefore it is chargeable to tax. This sort of an argument can always be put up, isn't it? And that is the reason why, students, this short stay exemption of section 10.6.6 has been put up. And what it says, students, be careful. It says that if the service period of that particular non-resident employee is for 90 days period, if the service period of that non-resident employee is for the 90 days period, meaning thereby the service period does not exceed 90 days, in that particular case, students, the salary so earned by such non-resident employee will be eligible for exemption under section 10.6.6. However, there are certain conditions that has to be fulfilled. There are additional conditions that has to be fulfilled. And what is that additional condition, students? Please have a look over here. The foreign enterprise is not engaged in any trade or business in India. That foreign enterprise of which this non-resident is the employee, non-resident individual is the employee, that foreign enterprise should not be engaged in any trade or business in India. That is point number A in this case. So this is, just keep this particular point in mind. That the foreign company whose non-resident employee is providing the services in India that foreign company should not be engaged in any trade or business in India. If this condition is satisfied, then up to a 90 days period of service of the non-resident employee, the salary so earned by such employee, will be eligible for exemption. See the MCQ of the ICI students over here in this context. In this scenario, students, point number 1, Mr. X, a foreign national, a citizen of India. Students, unfortunately, my phone is drained out completely, so it is in switch off mode, so I may not be in a position to handle the queries. Nevertheless, if there are any queries, I will take up that in my next session tomorrow. Tomorrow's session, by the way, students, I think it is at 9 p.m. Tomorrow's session's timing is at 9 p.m. Students, just keep that point in mind. Okay, so that is the timing for tomorrow's session. Just hear it. So that is the timing which is there for the tomorrow session. I'll just share the link in my Facebook, in my Telegram channel also, so that you are aware of the same. So Mr. X, a foreign national and citizen of USA, working with MINC dot, a US based company, this is the ICI MCQ, be careful, came to India during the previous year 21-22 for rendering the services on behalf of the employer. He wishes to claim his salary income earned during his stay in India as exempt. Which of the following is not a condition to be fulfilled? Not a condition to be fulfilled to claim such remuneration as exempt income under the Act. MINC dot, students, herein should not be engaged in any trade business, business in India. Obviously, this is the condition. We have just now seen that this foreign company should not be engaged in any trade business in India. So this is the condition. Answer point number B, Mr. X should not be engaged in any trade or business in India. So students, over here, obviously the condition of engaging with the trade or business in India is with whom? Is with the company and not with the employee. This is what they have targeted over here, students. And rest of it, 90 days period and all are already known. So just keep that particular point in mind. Now here, students, this question number 2, I'll just let you know. In this question, what has happened, students? These people, Mr. Harry and Sujay, they are Indian citizen primarily. They are Indian citizen, and as I told you, students, this exemption of being an employee and working in the foreign consulate, this exemption is not available to a citizen of India, and therefore Mr. Harry and Sujay, who are a citizen of India and working in the foreign consulate firm, whether their salary income earned from such particular service, will that be taxable under the income tax law? And the answer is yes. This was another particular MCQ question that they've targeted. Let's come to the next particular point, students. Now the next income which has to be considered is section 914. Dividend income earned by a non-resident or a foreign company. The dividend income earned by a non-resident or a foreign company, when it will be deemed to accrue rise in India. So students, they have said that a dividend income earned by a non-resident or a foreign company will be deemed to accrue rise in India if that dividend is earned from an Indian company. That dividend income is earned by a Indian company, from an Indian company. So supposingly, if the Indian company is the one who is making the payment of dividend, then the person to whom the dividend has been paid, namely non-resident and the foreign company who is earning that dividend income, that dividend income is deemed to accrue rise in India. That dividend income is deemed to accrue a rise in India, students. That is what section 914 of your dividend income is all about. This is what section 914, students, is all about. Okay, so who is the payer of the dividend? So as to attract deemed accrual, the payer of the dividend has to be an Indian company. Who is the payee? Recipient? The recipient has to be the non-resident individual or a foreign company, as the case may be. Then in that case, this dividend income will be deemed to accrue rise in India, primarily in this particular case. This is important only for one reason, for the tax rate. The tax rate part, students, we will do it together along with interest, royalty and FTS. Now students, always be very careful on this particular part. This is again repetitively asked particular section which they have targeted many a times. And in your RTP of your November attempt, there is one case law on royalty which I'll just will discuss with all of you quickly so that you are aware about what is the position that you have to take in your examination so far as that royalty income is concerned. Supreme Court judgment, students, has been reported and that has also been covered in your RTP. So therefore, let's do that particular case law carefully. RTP or the additional case law, I think the 3 additional case laws which has been introduced by the ICI, one of the additional case law happens to be this decision of the Supreme Court. We'll just discuss that, but before that, students, always keep in mind, for the income, namely interest, royalty and FTS, students, you have to always keep in mind this. In the examination, there are 3 types of question which is there from this particular side. The first one, students, is the deemed accrual. The first question, students, identify the real challenge is that students keep writing unnecessarily thing on this particular part of the non-resident taxation. So you have to be careful about what you are writing is appropriate and up to the mark. So first and the foremost is deemed accrual. When the deemed accrual will take place? Deemed accrual will take place in respect of interest, royalty and FTS. So when the deemed accrual will take place of this particular part, the second type of question is like that Supreme Court judgment which I am talking about it, that is on the basis of the characterization of the amount. Characterization, many students will say, sir, what do you mean by characterization? Characterization means that when the payment would be considered as payment towards interest, payment towards royalty or payment towards FTS, when the payment could be said as the payment towards interest, payment towards royalty or the payment towards FTS, when that payment would be considered, students. So that is point number 2, which is in respect of the characterization of the amount. So that's your point number 2. So this is also, this case law is all about that we am going to discuss with all of you. And the third one, students, also very popular, is the assessment. How this particular interest income of the non-resident, royalty income of the non-resident or the fees for technical service income of the non-resident, how this income will be assessed under the Act. So you have to first and foremost identify in the examination whether the question is it on deemed accrual, when this particular income will be deemed to accrue rise in India, is that the question all about, or whether the question is about the characterization of the payment as to whether the payment so made to the non-resident, whether that payment could it be considered as an interest, or could it be considered as a royalty, or could it be considered as the FTS. So when the payment which is made could be considered as interest, royalty and FTS, that is about the characterization of the amount. And the third one, how this fee income will be assessed under the Act if they are deemed to have accrued or rise in India. So that's the third part. The third one, students, is all about practical. So there would be a numerical question on the third part or the MCQ as the case may be. And the first and second would be based on some theory or case study. So this is how you are going to get the questions in the examination. Mentally be prepared, and you should have the approach how to identify your questions. So let's look upon the first one, deemed accrual part. Interest, royalty and FTS income, students, will always be deemed to accrue rise in India. Check who is the payer first. Check who is the payer. If the payer of the amount happens to be, who is the payee? We all know who is the payee. The payee is always the non-resident, students. The payee is always a non-resident. So there is no doubt about that as far as the payee is concerned. But who is the payer of the amount? Focus on that. Who is paying this interest or who is paying this royalty or FTS to the non-resident? So if the payer of the amount happens to be Government of India, if the payer of the amount happens to be the Government of India, students, then in that particular case, this interest, royalty and FTS income will always be deemed to accrue rise in India. This interest, royalty and FTS income will always be deemed to accrue rise in India, students. That is the first particular point. That is the first particular point. So who is the payer? The payer happens to be the individual, the payer happens to be the Government of India. then in that particular case, such interest income, royalty income or FTS income earned by the non-resident from Government of India will always be deemed to have accrued or arise in India. Students, be careful what I'm saying now. This deemed accrual is irrespective of the purpose for which the government has taken the service or has obtained the loan from the non-resident. This deemed accrual in India is irrespective of what? The purpose for which the government of India has taken the services or has taken the loan. So maybe, for example, they can give you a question that the government of India wants to do a project in Bhutan for which they have raised a foreign currency loan. Government of India wants to do a project in Bhutan primarily, and for which they have obtained a foreign currency loan. In that particular case, students, the interest that has been paid by Government of India, the interest which has been paid by the Government of India to that particular the lender, non-resident, that interest income will always be deemed to accrue as in India. But your answer will change if the payer is a resident or a non-resident. Be careful now. If the payer of the amount, who is the payer? Resident, non-resident. Who is the payee? Non-resident. So payer can be either resident, or even the payer can be a non-resident, but the payee has to be a non-resident, the receiver, isn't it? So if the payer is a resident or if the payer is a non-resident, and what they are paying interest, royalty and FTS. To whom they are paying? They are paying to non-resident. Then that non-resident income so received, that particular amount so received would always be deemed to accrue as in India, will always be deemed to have accrued or as in India if the payment which is made by such resident or by such non-resident is in respect of what? Their business or a source which is situated in India. If the payment is made is in respect of their business or a source which is situated in India. That is the most important point, students, to be considered. So let me in fact take you back to that same example of Government of India doing a project in Bhutan for which they have raised the money from a foreign institutions. The same example, I replace Government of India with a resident. If the resident, say for example, has taken a loan, or a resident has taken a particular service for its business or a source which is situated outside India, and for which it is paying to the non-resident, interest, royalty and FTS, then that interest, royalty and FTS income will not be deemed to accrue as in India. One more important point, I just want to tell you how you write your answers. There is one general mistake that many students do. And the mistake is that when writing the answer, students write the answer like this, that the income is deemed to accrue or rise outside India. What they are writing in their answer? The income is deemed to accrue or rise outside India. Please don't do that. The deeming fiction that has been introduced is only for a limited purpose. The deeming provision of section 9 is introduced when the income is deemed to accrue or rise in India. It does not tell you that if it does not accrue in India, it means it will accrue outside India. It may not accrue at all, anywhere. Primary, you don't have to force yourself writing that it is deemed to accrue outside India. What you only will say that, say for example, a resident has taken a technical service for a project situated outside India, and it is paying fees for technical service to the non-resident, then this fees for technical service paid to the non-resident will not be deemed to accrue or rise in India. This is what you have to write. Will not be deemed to accrue or rise in India. Please don't say it is deemed to accrue outside India. The moment you write like this, your marks get deducted, even though your final answer is right. So just be very careful on this particular part. Is that clear to all of you students? All of you are clear? So you will simply say that since the money or services so taken is in respect of a project or a business or a source which is situated outside India, therefore the fees for technical service paid to the non-resident does not accrue or does not deem to accrue or arise in India. Does not deem to accrue or arise in India. Is that clear to all of you students? Fine. That is the point. Now students, but if supposingly they have taken this particular services or they have obtained the loan for a project which is situated in India, if they have taken the money or they have taken up the services for the project or for the business in India, then in that case what we will say, then this amount which is paid, which amount? Interest, royalty or FTS amount which is paid to whom? To a non-resident. This amount which is paid will be deemed to accrue or arise in India. Will be deemed to accrue or arise in India. Now, if it deems to accrue or arise in India, students, the next question, and also a very popular question in the examination, the next question is that whether it is necessary further to find out, as to whether the non-resident has actually rendered the services in India. In such particular case, is it necessary to find out once the deemed accrual is established, because the loan has been obtained or the services has been obtained for the business or a source which is situated in India, and therefore the interest, royalty and FTS paid by whom? By the resident or a non-resident, and paid to whom? Paid to the non-resident. So whether these amount, will it be deemed to accrue or arise in India? Answer is no. So answer is yes. Answer is yes, it will be deemed to have accrued or arise in India. And now once it is deemed to accrue or arise in India, are we supposed to further find out that whether the non-resident has actually rendered the services in India, or whether the non-resident has got any business connection or a place of residence or any physical presence in India? Are these criteria important in this case? Answer is no. So what is only relevant is whether this money obtained or the services obtained, is it in respect of their business or a source situated in India. And once it is established that yes, it is in respect of their business or source which is situated in India, then the amount so paid, namely interest, royalty and FTS to the non-resident, that amount will be deemed to have accrued or rise in India. It is now irrelevant further to find out. It is now irrelevant further to find out as to whether what students? Whether the non-resident has actually rendered the services in India. So this is irrelevant. So therefore, this is an irrelevant test, rendering of services in India, or whether the non-resident has a place of residence or a place of business or a business connection in India. All these criteria becomes irrelevant for the purpose of deciding the deemed accrual. Okay. So this is what it is, students. Always bear it in mind. One question which I can always keep, like you also are aware of one question which is very popular in the examination, wherein they will tell you that there is a German company which is providing technical services to an Indian client. A German company is providing technical service to an Indian client, and that services is both offshore and onshore. That services is both offshore and onshore. What do you mean by offshore and onshore? Onshore means they are coming in India and providing the services. That is onshore service. And offshore would mean that they are in their own country, and from their country itself they are providing the services. Okay. And now this German company has raised two invoices. One for the onshore services, onshore technical services provided to the Indian client, and second invoice is for the offshore services provided to the Indian client. Two invoices are being raised. So therefore the question is whether in this particular case the FTS income, will it be deemed to have accrued or rise in India? FTS income, will it be deemed to accrue or rise in India in respect of both the offshore and onshore services? Answer is yes. Where the services are provided has got no relevance. What has to be looked upon is whether the payer who is a resident, is he making the payment in respect of their business or a source situated in India? If the answer is yes, then the entire FTS amount will be deemed to have accrued or rise in India. The entire FTS amount will be deemed to accrue or rise in India. Is that clear to all of you? That is your point number 2, students, and that is how the characterization, this is your point number 1, and that is what your deemed accrual point is all about. Is that clear to all of you now, students? Shall we now proceed on the next one, that is characterization? Let's have a look on the characterization. Our main is on the royalty part, because since it is there in your, now in the RTP question, it is also there in your this one. It is also, students, there in that particular additional case law which the IC has released. So therefore, this particular part I can see could be one of the most important area for your examination. So in characterization, to me, only this is going to be targeted. So whenever now you have to revise in the last month, obviously you cannot revise everything, but you have to do a smart revision to cover up everything. So therefore, this is how you have to revise. First, deemed accrual, whatever you have discussed. Now comes the characterization. Students, first let me give you other particular part of FTS. When I am paying a technical, when the amount which I am making the payment, that amount would be considered as a fees for technical services. Now the fees for technical services, students, which you are making the payment, has one very important feature to always take a note of. One very important feature should be there in that technical service so as to qualify as FTS. And what is that feature? The feature is that there has to be a customization of a service. There should be a human involvement, should be in there in respect of that services. Only then it could be considered as an FTS amount. Only then, students, it will be considered as an FTS amount. So if there is any human intervention in that particular services, then and only then it will be considered as an FTS. So the question that could be targeted in the examination is, supposingly there is a standardized facility, like you are paying an internet bandwidth charges. It's a standardized facility because you have to subscribe to the plan. Netflix, subscribe to the plan. It's a already pre-existing standardized facility. Did the Netflix was made for you, that you said what you want and that they have done it? No, that is a standardized for all. They are giving you the plan and you have to subscribe. So now with this, can we say that we, by subscribing to this standardized facility, are we making the payment of a fees for technical service? Are we making a payment for fees for technical service? To that the answer is no. This cannot be considered to be the payment for FTS. This cannot be considered to be a payment of FTS because there is a standardized facility involved in this case. And what is required, students? What is required is a customized facility. What is required, students, is the customized facility. Is that clear to all of you? I hope that, students, every one of you are clear on this particular part. So FTS, when there is a human involvement, when the services are customized, a standardized facility for which the payment is made, then that payment cannot be considered as FTS. Fine. And now come to my next part, and which is the directly I will take across on the royalty and that case law which I am talking about it. But that case law is very technical, students. I need to give you a bit of background for that particular case law so that you can appreciate what exactly has happened in this. Let's try to understand the background of the case first, students, and then only you can appreciate this one. Students, like for example, I am an author of a textbook which is published by Bharat Law House. So Bharat Law House is publishing my textbooks. So in that particular case, the original content is of mine, and then the content has been given to Bharat Law House. So therefore, what happens now? This is the original content I am now sharing with Bharat Law House. So I am transferring my copyright to the Bharat Law House for the purpose of exploiting this copyright, and by virtue of exploiting it, they can make number of books out of it, and by making number of books, they can then sell the books in the market. That is the entire arrangement. Now what Bharat Law is making the payment to me, what Bharat law students is making the payment to me, that payment can be considered as royalty. All of you agree to this? Payment towards the copyright, isn't it? Payments towards the copyright. So that payment would be considered as royalty. Now, Bharat law, based on that copyright, they exploit the copyright, they are making the books, and that books are being sold to the customers. Now, the customers who are making the payment for the book, is that particular payment, can that be considered as a payment towards copyright? Can that be considered as that they are paying towards copyright, or they are paying towards copyrighted article? You who are buying the textbooks, students, you who are buying the textbooks, will it be considered that you are buying the textbook primarily? Are you paying for copyright, or you are paying for copyrighted article? You are paying for copyrighted article. So therefore, your consideration which is paid to Bharat Law House is the consideration paid to the Bharat Law House. Will that consideration paid, will it be considered as royalty in the hands of Bharat Law House? Answer is no. For Bharat Law House students, it is a sale of goods. It is a sale of goods. And if it is a sale of goods, so for Bharat Law, it is a business income. It is a business income. For me, I am getting a royalty. So for me, the characterization is a royalty income. For Bharat Law House, it has to be a business income. This is a general understanding. Now let's come to the definition of royalty under the Act. Now, in a very simple word, students, because this is a very technical definition, I'll just try to make it as simple as possible for all of you. As per the definition of royalty under the income tax law, it includes both the consideration for copyright and the consideration for the copyrighted article. This is our definition. In fact, in 2012, they have enlarged the scope of the definition of royalty to include the consideration for copyrighted article as well. And the target was computer software. The computer software. The computer software, students, as you all are aware, copyrighted article is standardized, like books is a standardized article, standardized product. Whether you are having or your friends are having, it's one and the same. Same is also the case with software. There are two types of software. One is the ERP, which is customized as per the client's requirement, and another is the standardized software. Standardized software. So if you see Microsoft operating system, standardized software, Tally software, standardized software. So these standardized software, students, which are there, are more like what? Goods. Why it is like a goods? Because it has got two features. And which is the two feature? It has got the main feature. What is that main feature? The main feature is that it is capable of being sold in the market. It is capable of being sold in the market. So in the market with various customers, these copyrighted computer software, they can be sold in the market. And therefore, students, this has the feature of a goods. This has a feature of the goods. The same way Bharat law selling you the textbook has the feature of the goods. The same way Bharat law selling the textbook has the feature of the goods. Why it is having a feature of the goods? Because it is capable of being sold in the market. Because it is capable of being sold in the market. So therefore, the consideration that you pay for a standardized copyrighted article, that consideration is a consideration towards sale of goods. So same way, if we are making the payment, students, if we are making the payment for buying a copyrighted Microsoft operating system, so if I buy copyrighted Microsoft operating system, if you are buying copyrighted Microsoft operating system, it will function the same in our computer, isn't it? So the payment which we are making, students, the payment which we are making is for a standardized copyrighted article, and hence can it be considered as a good, can it be considered as a royalty, or should it be considered as a consideration for goods? Consideration for goods. But our definition of royalty includes what? Includes the consideration which is paid for the copyrighted computer software. The copyrighted computer software. Okay, so in this particular case, as per the income tax law, what we pay to Microsoft primarily is a payment towards royalty. And if it is payment towards royalty, therefore the income of Microsoft is deemed to accrue as in India for giving us the copyright computer software, which is Microsoft operating system. So therefore that payment as per our income tax law is considered as a royalty amount. And because I, being a resident who is a payer and using it for the purpose of my business and profession in India, therefore in that particular case, the consideration which I am paying will be deemed to accrue as in India. The consideration, students, which we are paying, will it be deemed to accrue as in India? And the answer is yes. So the consideration, students, that we are paying is deemed to accrue as in India. Is that clear to all of you? As per the Income Tax Act, because that is what they have taken the position, that this consideration would be considered as royalty amount. Now, therefore, it is taxable in India. Now, what about US, the country in which that company is a resident? In that country also, the same amount will be taxable. In that country also, the same amount will be taxable, because that is a country of resident. India is a country of source. That is a country of resident. India is a country of source. So it will be taxable in that country as well as it is going to be taxed in India. This will give rise to a double taxation. And if it gives rise to double taxation, you will go to the treaty. And in the treaty, there is definition also of royalty. Now, what do you think, students, in the definition of royalty as per the treaty, whether the treaty, will they have such enlarged definition that the royalty will include the sale of both copyright as well as copyrighted article? Answer is no. In the definition of royalty as per the treaty, it will have a normal meaning. And what is the normal meaning, students? That the consideration should be in respect of the copyright and not of the copyrighted article. As simple as that. So the definition of the treaty has a limited scope. What is generally understood, that the consideration is for the copyright, that only would be considered as royalty amount. And if the consideration is for copyrighted article, then that cannot be considered as a royalty income as per the treaty. Now you tell me, there is a conflict between the treaty definition of royalty and the definition as per the act. There is a conflict between the treaty definition of royalty and the definition as per the act. What will prevail? The treaty will prevail over the act. This is what this judgment is all about. Did you all got this one? So the judgment is that in such case of the sale of copyrighted or a standardized computer software, the sale of such standardized computer software, students, the consideration which is paid cannot be considered as royalty as per the treaty, and therefore it cannot be taxed in India, because the taxability will not be as per royalty income. The taxability would be as per business connection, because it's a business income. So unless that non-resident has a business connection in India, because the treaty is treating this amount as a business income, consideration for the sale of goods, and if it is a consideration for the sale of goods, then you have to look into the definition of business connection. So unless the non-resident has a business connection in India, this particular amount cannot be considered as chargeable to tax under the act as per the treaty. And as I told you, if there is a conflict between the treaty and the act, then the treaty will override the position that is taken under the act, at least when it comes to the definition. Is that clear to all of you, students? So this is all about the characterization of the amount in this context. And the last one, students, which is the very important one, students, because here there is a numericals which has been there, and it is meaning of FTS. I've already told you. The case law, I've already have told you, students. Here in these case laws, I'll just tell you over here in this case context of the case law, no technical services involved in the payment of internet bandwidth and bandwidth services. Why? Because it is a standardized facility. Similarly, internet connection charges to a mobile operator cannot be regarded as technical service unless there is a human involvement present. Same. These are all standardized services, and because these are standardized services, the payment in respect of which will not be considered as an income which is deemed to accrue rise in India. Is that clear to all of you? Now let's come to this particular part of the assessment. Students, of the assessment. And now the third part, which is very important, is the rate of how the assessment will be made. Let's look upon to first. There are 4 income now, 4 passive income for which we have to decide the assessment. Which are the 4 passive income? First is dividend, second is interest, third is royalty, and fourth is FTS. Please understand, dividend, the deemed accrual of dividend is on what basis? The payer has to be an Indian company. The payer company has to be an Indian company. That will give rise to deemed accrual in India. Okay. But for interest, royalty, and FTS, what is the criteria of deemed accrual? I've already told you. If the government is the payer, then when the deemed accrual will take, then it is always deemed to accrue in India. If the resident or the non-resident, if they are making the payment, then the deemed accrual of interest, royalty, and FTS in the hands of non-resident will arise only if these resident or non-resident payer are making the payment in respect of the business or a source which is situated in India. Only then it will give rise to a deemed accrual of these 3 amount. Is that clear to all of you? Fine. But now how the assessment is done? Very simple is dividend, students. Dividend, students, it's the most simplest one. Always the dividend income is taxable in the hands of non-resident. Always the dividend income is taxable in the hands of the non-resident at the special rate under 115A at the rate of 20%. Special rate under 115A at the rate of 20%, students. Okay. Thereafter, students, when it comes to interest income, be careful now. When it comes to interest income, students, so far as the interest income is concerned, students, what happens over here? Just a second. So far as the interest income is concerned, what happens? Interest income, students, keep in mind this 20% rate is the general rate, but there is a further lesser rate of tax for interest income in the hands of the non-resident, and that rate is 5%. Now that 5% rate, students, is applicable. The 5% rate at which the interest income will be assessed in the hands of the non-resident will be applicable if such interest income is arising out of, students, if such interest income is arising out of any long-term infrastructure debt fund. Remember, like 3 things. 5% of tax rate is applicable in the case of interest income of non-resident. The first one happens to be when the interest income arises out of investment in long-term infrastructure debt fund. Second one, students, is when the interest income is received from REIT or business trust. And the third one, students, if the interest income is out of or is from a rupee denominated bond. The interest income is out of or it is from a rupee denominated bond. So in these 3 cases of interest income in the hands of the non-resident, the rate of tax is only at 5%. The rate of tax is only at 5%. Just keep that particular point in mind. Is that clear to all of you? In all the other cases, students, the rate of tax of such interest income, in the hands of the non-resident will be at 20%. Is that clear to all of you? However, for that 20%, there is one condition that you should always be careful. ICI, you should always salute in the kind of the questions that these people are asking. Brilliant question, students, that they have targeted over here. This 20% also rate is applicable when the loan has been given by the non-resident in foreign currency. When the loan has been given by the non-resident in the foreign currency, only then what? Only then the interest rate would be charged, the interest would be charged to a rate of tax of 20%. But somebody will say, sir, what if the debt is in Indian rupee? The debt is in Indian rupee, then whether 20% rate will it be applicable? No. Then what happens in that case? Then in that case, students, what will happen would be that this interest income will be assessed in the hands of the non-resident as per the normal rate of tax. The special rate of tax will not be applicable. The normal rate of tax, depending upon, like if for example the non-resident is a foreign company, then the rate of tax would be at 40%. If the non-resident is an individual, then the slab rate would be applicable. That's exactly how it has to be the case. Is that clear to all of you, students? Why I'm telling you? Because there is one question. I'll just discuss directly that question and then I can go through that question with all of you together. But that crux of that question was like this. The crux of that question. Students, in that particular question, what has happened was that the non-resident has provided fees for technical service to the Indian client. The non-resident has provided the technical services, students, to the Indian client. Now, do you know what the Indian client did in this case? Instead of making the payment of fees for technical services, what it did, it gave the consideration. Instead of paying the FTS income students, what it did was, it actually gave what, students? It gave its own debentures as a consideration. The Indian company to whom the non-resident has provided the technical service, the Indian company, how they have paid the consideration? The consideration was paid by issuing their own debentures. So therefore, students, that debenture that will be issued would be in INR. It implies that the debt, now debenture is a debt. That debt is owned in INR. That debt, students, is owned in INR, and therefore because that debt is owned in INR, therefore the interest now which is paid by the Indian company to the non-resident, the interest which is paid by the Indian company to the non-resident, is it, students, is it going to be charged at the special rate of 20% in this case? Answer is no, because the debt is owned in INR and not in foreign currency. The debt is owned in INR and not in foreign currency, and therefore the applicable rate would be the rate which is the normal rate of tax. And in that question, the non-resident was a foreign company, and because it was a foreign company, this interest income students was taxed at the rate of 40%. This interest income was taxed at the rate of 40%. Is that clear to all of you? Now, one last point, students, I just want to discuss, and then we can move on quickly to our next particular item of our discussion. Students, herein, that our dividend income, students, interest received from the REIT, that is taxed at the rate of special rate of 5%. If the non-resident is receiving interest at the rate of from the REIT, then in that situation, students, it would be at 5%, isn't it? It would be at 5%. The real point is the dividend rate of tax. This dividend rate of tax of 10%. Be careful on the dividend part. The rate of tax of dividend could be at 10%. I think many of you are aware who would have done business trust. So students, keep this particular point in mind. Supposingly, students, you all are aware, in the case of business trust or REIT, there is an SPV, special purpose vehicle, and that SPV is generally they are subsidiary of the REIT. SPV will pay the dividend to the REIT. The dividend will get passed through to the unit holders. Who are there. Okay, so if the unit holder who are there, the dividend that is received from the SPV by the REIT will thereafter pass on to whom? To the unit holders. So if the unit holder happens to be a non-resident and we are receiving the dividend from the SPV but through the REIT, we as a unit holder are receiving the dividend from the SPV but through the REIT, then that dividend income, will it be charged to tax or not? And if it would be charged to tax, then at what rate? So let's answer the first question. Whether that dividend income in the hands of the unit holder, will it be charged to tax or not? The first question. Now the answer to that question is depends. It all depends whether that SPV has taken the option of the alternate tax regime under section 115BAA. The SPV, whether they have taken the option of alternate tax regime under section 115BAA. If they have taken the option of the alternate tax regime under section 115BAA, then in that particular case, the dividend that has been received by the unit holder, students, through the REIT, that will be charged to a tax rate of 10% if the SPV has opted for the alternate tax regime of 115BAA. But if they have not taken the option of the alternate tax regime of 115BAA, then in that particular case, the dividend so received by the unit holder through the REIT, the dividend so received by the unit holder through the REIT, that dividend income, students, is exempt from tax. That dividend income is exempt from tax in the hands of the unit holder. That is a special particular point so far as the dividend taxation is concerned in the hands of the unit holder when the unit holder is a non-resident. I hope that this particular point is well taken by all of you, students. Fine. So this is the last particular aspect about the rate of assessment of the dividend and the assessment of interest income is concerned. So far as the assessment of royalty and FTS is concerned, I think all of you are aware of this. It's a very simple thing, but let's very quickly in next 1 or minute, 2 minutes, students, let's finish it off. The assessment of the royalty and FTS, students, will depend upon the assessment of royalty and FTS income will depend upon what? That whether the non-resident assessment of royalty and FTS will depend upon whether the non-resident or the foreign company is providing the services through its PE in India, is providing such services through its PE in India. That will be the basis of deciding how the assessment of royalty and FTS income of the non-resident will be undertaken under the Act. That will be the criteria to decide how the assessment of the royalty and FTS income of the non-resident will be undertaken under the Act. So if, see, just be careful my wording, sir. Here the wordings was whether the non-resident or the foreign company is providing the technical service through the PE, through its PE in India. Through its PE in India, be very careful. So just because the non-resident or the foreign company has the PE in India, family, that is not the question which I have asked. My question which I have asked is whether the non-resident or the foreign company is providing its services through its PE in India. This is the question. Okay. If the answer is yes, it is providing the services through its PE in India, then in that particular case, students, the assessment will take place on net basis. The assessment will take place on net basis under section 44DA. The assessment will take place on a net basis under section 44DA, but where they are, students, where they are not providing the services, where they are not providing the services through its PE in India, then in that particular case, the assessment will be undertaken on a gross basis under section 115A. Now, there was one question in the examination, I think all of you may be aware, that the non-resident or that foreign company had a PE in India, but they have bypassed their PE. They have not taken the services of their PE to provide the services to the Indian client. So directly the non-resident is providing the services to the Indian client without involving its PE in India. So therefore the question was whether this particular royalty and FTS income which is earned by the non-resident from such services, whether that will be assessed on net basis under section 44DA, and the answer is no. It will not be assessed on a net basis under section 44DA. The assessment will go under section 115A. By the way, assessment under 115A would mean, students, will mean that the assessment of royalty and FTS would be made in gross basis. Whenever I say gross basis, it implies that no deduction will be given. Of any expenditure, loss or allowances. So directly whatever is the royalty amount which has been paid, that will be assessed to tax at the rate of 10%. But if the condition is fulfilled, what is that condition? The services were provided by the non-resident to the Indian client through its PE in India, then the assessment of that royalty and FTS income of the non-resident, will be undertaken on net basis. And if it has to be undertaken on net basis, students, in that particular case, this particular expenditure, students, will be allowed as deduction. This particular expenditure will be allowed as a deduction this particular expenditure, students, will be allowed as a deduction. Which expenditure? Only the expenditure which is wholly and exclusively pertaining to the PA in India. Only the expenditure which is wholly and exclusively pertaining to its PA in India, only that expenditure, students, will be allowed as deduction and nothing else. And nothing else. Just keep this particular point in mind, students, because this is very important. So only that expenditure which is wholly and exclusively pertains to its PA in India, that will be allowed as deduction. Where two particular points I am taking from the practical question, and let me discuss out. Two particular points from the practical question. Apportionment of the HO expenditure to the Indian PE. Apportionment of the head office expenditure to the Indian PE. Whether that apportionment of the HO expenditure to the Indian PE, whether it will be allowed as deduction. Whether it will be allowed as deduction, students, so that the answer is no. The apportionment of the HO expenditure will not be allowed as deduction in this particular case. Clear with this one, students? That is point number one. Because it is not wholly and exclusively pertaining to Indian PE. What about the second point? The second point is where the PE reimburses its HO for the purpose of meeting up the PE expenditure. The HO is bearing, initially it is meeting up the expenditure of the PE in India, and the PE subsequently is reimbursing the HO for meeting up its expenditure. Whether that expenditure will that be allowed as deduction, and the answer is yes, because the expenditure is wholly and exclusively of the PE in India, and therefore it will be allowed as deduction. Now, students, the next point which I'll come is on the TDS part. Here, students, many a times the TDS part is also important. I think many of you are aware. So let's brush it up, this particular concept. Students, here the tax rate is 10%. Here, when it is assessed in 115A. So when it is assessed in 115A, before the TDS part, one very popular question I'll ask, will tell you, and see how the students make blunder in those questions. In one of the questions, students, they have asked that the non-resident has its PE in India, and through its PE in India, they are providing the technical services. Through its PE in India, they are providing the technical services. That was the question. As dividend and interest income is concerned, so far as dividend and the interest income is